Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Volatility in markets continue, and we continue to monitor all of the action. And today I'm joined by Dan Chung, CEO, CIO, and Portfolio Manager from Fred Alger Co. Dan, nice to have you here in the studio. Thanks for being here.
Thank you, Anthony.
So I know we've got a lot to get to, clearly, with the markets these days and the global economy. It's in this period of uncertainty. We know that volatility reigns supreme. Inflation is rising. The war in Ukraine continues. As we were just saying a few minutes ago, the war will end, but when and at what cost, and what will that look like? We see energy prices continuing to rise. So volatility is just everywhere. What do you think then, Dan, would you say are the biggest threats right now to the markets and even just the economy in general?
So I think for a long time, growth in the U.S. has really benefited, the white-collar worker, upper-income Americans. Globalization has been a huge benefit to them and their companies. But blue-collar labor has really suffered. I think there's some positive signs for our society in that wages are coming back, and it's coming back to blue-collar workers. And I actually think that's a great thing for our society again. But that, coupled with commodity inflation, obviously oil, natural gas, oil's above $90. We haven't seen that in a long time, obviously the Ukraine conflict. But wages and commodities translate into higher inflation over time. And we also haven't seen that in a long time. Mm-hmm. So I think one of the most difficult challenges, not just for the markets, but for the economy, will be this very difficult period where the oil and gas industries in the U.S., and we're in an interesting position. The U.S. is now an energy powerhouse, but we can't really get our oil and gas to, in particular, Europe, which really needs it right now. And that's just because the supply chain, the infrastructure needed, wasn't expecting this kind of change in demand globally. And so I think that will happen. Whatever happens in Ukraine, how it gets settled, I think ultimately we're going to see a big shift in the energy markets globally. And it's going to benefit long-term the U.S. because we're strong in this area. We're going to see a ramp up in renewables, but that takes time as well. Short-term, there's no way we can ramp up wind, solar, hydropower. And so the outcome is I think we're going to see sustained high oil and natural gas prices, and therefore electricity prices and other commodity prices for a while. And that's going to be painful for lower income Americans because they are pretty exposed to energy and other commodities.
Right. Yeah, I mean, just in general, when you think about the rise in energy prices, as we're talking about, inflation is certainly a concern. There are many people who are having a hard time even paying for gas at the pumps as it continues to rise. But again, that won't be forever. Eventually, prices will start to come down a little bit here and there, depending on how everything goes in Europe with the war in Ukraine.
I think they will come down over time because one result will definitely be increased interest in renewables. And those are already high growth industries.
Sure.
Wind, solar, and others have been growing rapidly. It's just that they're a very small percentage of the total production and need for energy that we have today.
Right. And infrastructure, by the way, also is certainly needed to get these renewables up and running.
Right. So, I mean, the infrastructure, LNG is, for example, a great example. Our analysts were looking at it, and the issue is, our biggest facilities for gasification, liquefaction, transportation, and then regasification on the other side, say Europe.
Right.
They're running at full capacity before this crisis, and it takes years and years and years to increase capacity there. So it's a medium-term problem, short and medium-term problem in terms of getting the nat gas energy, to where it's going to be needed, which is Europe. But I think it offers a lot of opportunities for our economy longer run.
Absolutely, and a lot of investment opportunities in general for the average person who may be watching this show with us today. I want to get to a particular topic, which I know you're really big on right now, which is technology. But before we get that, with inflation in mind and knowing that the Fed here in the U.S., Jay Powell, has raised rates, we know 6 more hikes may be coming, although he said he would remain data dependent. You think the Fed is tightening too quickly? And by the way, let's also not forget that the yield curve this past week inverted, at least for a little bit, which of course historically is a recessionary indicator. So where do you think we're going here?
Yeah, so rates is, so inflation, first half, Fed response, rates. So we were heading into and we are in a rate hiking cycle. And I think what I want to remind the viewers is that actually it doesn't a rate hike cycle doesn't necessarily mean inflation, recession is coming. It doesn't mean that the stock market, bull market ends. And in fact, since World War II, they've been 15 rate cycles, 6 of them, no recession. 9 of them, there has been a recession ultimately, but it's taken, on average, 24 to 30 months from the first rate hike to see an S&P peak. Mm-hmm. And I think the key thing is actually during that period, the S&P on average has gone up over 30%. So that's the history. Where are we today? I think the key thing to remember is real rates are still very negative, actually. And meanwhile, we still haven't reopened fully anywhere in the world from COVID. Right. And so I think the key for the direction of the market ultimately is economic expansion, GDP growth, earnings growth. And I think all of those are still set to happen, and that the Ukraine war has not changed that outlook, and in particular for the U.S.
Right. We look at jobs here in the U.S. They continue to remain strong. Right. The joblessness rate is declining, and Powell himself said he's very confident in the strong economy here in the U.S. So you have to kind of take him at his word here.
Yeah, I mean, he should know as well as anyone.
That's right.
Right. And we monitor through our analysts and all the industries that we follow, which is essentially every industry, just the general demand. And you see there is a lot of pent-up demand among American consumers who have trillions in savings basically accumulated from COVID. They couldn't travel. Many things were delayed, and even the desire, for example, to buy homes and home construction projects, many of which have been stalled by supply chain
That's
issues.
Right. That's
I
right.
mean, these are all really positive fundamental drivers for continued growth in the U.S. Economy, and that ultimately is what's going to drive the market.
Right. Thanks, Dan. So let's talk about tech and e-commerce, which you do have a pretty strong conviction on. I'm curious to see where your thoughts are here. I mean, as a lot of us sort of think about tech, we think about the rise in tech that we all had to experience, especially buying it and using it for the first 2 years of the pandemic. And now that people are maybe coming back to work or going into the offices again, is there still an opportunity here? Even e-commerce, it seems like maybe it might trail off, but perhaps people have gotten used to this style of acquiring goods.
Right. Yeah, COVID forced rapid change across many industries, remote work, telemedicine, e-commerce. And for example, in e-commerce, we believe for many consumers, first time they bought and had groceries delivered online. Mm-hmm. And by and large, a very positive experience. Grocery delivery online, ordering and delivery, is still actually highly underpenetrated. And so that's a big opportunity for the players who are in there. And of course, we all see the logistics companies as well as, of course, the grocery store providers who are focused on that. I mean, our view is that when you get major changes in our society or in our economy, COVID being one, a cyclical one coming out of a recession induced by COVID, and then also the geopolitical order, change like that actually drives innovation. And we don't like to be forced into innovation, but essentially that's what COVID did. It forced us all to adjust and adapt to the new necessities, new realities. But in our view, in our investment philosophy, innovation is always creates opportunities, because there are companies that are natural innovators or quick to disrupt and adopt, right? And then there are those that are slow or unfortunately too wedded to old ways of doing things that can't benefit from it. So we look at not only the innovation that's occurred because of COVID, but also sort of secular growth trends that were in place before COVID, perhaps accelerated during COVID, but are likely to basically be reinforced even as we reopen. So those are things like cloud computing, data analytics, everything from marketing to logistics is now driven by data analysis.
That's right.
Machine learning, AI. I mean, the science fiction movies portray robots, but the reality of it is actually a lot more boring, but it's digital business processes that are taking some of the ridiculously manual, repetitive work out of, say, entering our name into a new application to become a client at UBS, right?
That's
right. It's taking the pain out of entering our credit cards at the checkout on at e-commerce and instead clicking a button, probably with an e-wallet.
That's exactly
we've adopted,
right. Face ID or a thumbprint or some kind of technology there.
Right. And so, and for businesses, it's major stuff like accounts receivable, payable, collections. I mean, these are all accounting. I mean, so we see a lot of that was forced adoption during COVID. Businesses were remote work, but they still had to get all this stuff done.
That's
the
right.
clients were suddenly in new places, so you needed systems that were flexible to get that client to pay their bill.
We had no choice. We had no choice at all.
Right. So, so cloud computing, AI, machine learning, data analytics, driving things like remote work, telemedicine, better healthcare. I mean, these are the things that we see not only sort of benefiting from COVID because of the wide experimentation that occurred and the learning, but also actually reinforcing their advantages. And so we see a lot of opportunities in companies that are leading providers of the technologies,
right?
Or the users. I mean, we should note that the ubiquity of technology today, and one of the advantages of it is lots of companies from the brick and mortar world or from traditional heavy service industries like healthcare, their adoption of technology has accelerated, and it is improving the cost and the efficiency with which they deliver their goods and services.
Yeah, there's that old expression, necessity is the mother of invention. Right now you could say necessity is the driver of innovation.
Exactly.
We all had the need, so we had to figure out how to make it happen, so here it is. Dan, thank you so much. This is great. It's always nice to have an in-depth conversation, and welcome to the studio. We'd love to have you back.
Thank you.
Yeah, good to see you. Again, we've been talking to Dan Chung, CEO and CIO from Fred Alger Co. And for more information, you can visit our website at ubs.com/views. And also don't forget to follow us on social media. LinkedIn, Facebook, Instagram, and Twitter are some places you can check out our content. Plus, our show, UBS Trending, is on demand. You can check that out also on our website and on the UBS YouTube channel. And as always, if you have any questions about your own portfolio, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great day, and remember to keep your eyes on what's trending. We'll see you soon.